XRF gets priced like a cyclical despite having 20% compound earnings growth for the last 5 years in basically a straight line. RPM Global, same thing. It's cheap relative to peers. It's got a strategic angle. So it's all about relative to what price you're getting, I suppose, is the key there.
But I'd imagine if you do the attribution in like 5 years, right? Like if you run the composition of like what worked well over the full duration, I reckon this bucket will slowly like start to show the reps.
I think this is the one that kind of slowly chips away over time and over long term looks really good, but the others are kind of can come and go. So even though we've broken down and inflecting profitability has been the biggest driver in the previous 18 months, what might work over the next 18 months could be this. It could be some of these mispriced assets, which so far haven't contributed as much. So it's kind of like multiple shots on goal.
Yeah, your job as a fund manager is not to guess. Your job as a fund manager is to do what you can do with what's in your control. And I think, we're always going to own stuff in all these buckets. And ironically, when you do it in hindsight, you'll come back to me and you'll say, oh, well, Catapult's now not inflecting profitability. Now it's a quality compounder. Yeah. And so the reality is like, we actually don't think about any of this stuff.
Yeah,
this is how we classify it for you. Yeah. Right. So we're just trying to find the same stuff we're always trying to find.
Which is good businesses at good
businesses that are growing at good prices, right? Like it's not rocket science. As I've said before, we don't have a style. Our styles make money. That's what we do. So if we can find a 1 + 1 = 3, hidden asset value, you'll do it. Like it doesn't. It's just this is just what's worked to date. And I think if you built your investment philosophy around finding these things, you do quite well.